These are the top 10 things I would tell my clients not to do if you are pre-approved for a mortgage or are currently under contract. Number one, do not quit your job. We have that happen all the time where people change jobs midstream and can change their income, their job history, and can really derail your loan application. Number two, do not let anyone check your credit. Don't go buy a car. Don't do anything that could change your credit score. Number three, don't pay off credit cards unless we've discussed it. Don't close credit cards. Either of those things can sometimes even decrease your score, which can cause issues for the pre-approval. Number four, do not make big deposits into your account. We are looking for deposits that vary depending on your loan program. And most of the time what we're looking for is the government requires us to look for money laundering. We're looking for money that you may have borrowed that's not disclosed on your credit report, things like that. So do not borrow money, do not deposit money into your account during the loan process. Number five, do not withdraw money from your account that you are using for down payment. Even if you have enough money for the down payment, sometimes we need extra money to show reserves to strengthen your application. Do not withdraw money from your account during the application in large chunks unless we've discussed it first. Number six, don't get added as a cosigner. Don't take out any new student loans. Don't consolidate any debt. Any changes to your credit report, even if they're minor, can sometimes be an issue for loan closings. Number seven, keep making all your payments on time. Sometimes we have to update credit history on credit reports during the process and make sure your payments are current through the day of closing. So even if you've been on time every month up until the time of application, we still may have to update that. A 30-day late payment can derail your application even if we've already pulled your credit report. Number eight, don't pay off collection accounts. Unless we've discussed it beforehand, sometimes paying off collection accounts can actually shorten the average age of your credit history and cause your score to drop. And most of the time we don't have to update credit scores during the process, but there are times when a credit report, maybe you've been pre-approved for a long time, and we do have to pull a new credit report. So unless we've discussed changes that need to be made to your credit report, do not pay off collection accounts. Number nine, do not max out your credit cards. In fact, if you have a credit card, it's best to keep the balance less than 30% of the total credit limit. If you have a balance of $1,000, try not to let your balance exceed $300. Credit bureaus look at how you use your credit card as a percentage of the limit. And if you're using more than 30%, that can typically drop your scores. One secret, if you're looking for a magic number, 10% is normally the number that will get you the highest credit scores. Number 10, call me, text me, DM me, send me an email for any questions. That's the big thing, is let's stay in touch while we're doing this to make sure that you're going to get into the house. These are the top 10 things I would tell my clients not to do if you are pre-approved for a mortgage or are currently under contract. Number one, do not quit your job. We have that happen all the time where people change jobs.